That's right. The 18-day flow of money into Vietnam, it suggests that overseas money managers just aren't fazed by the tensions between Hanoi and Beijing. In fact, foreign investors have been actual net buyers on the Ho Chi Minh City Exchange every day since April 18th. That's the longest stretch since January. All this as valuations declined to a 4-month low. They added some $93 million to their holdings, even as the benchmark VN index slumped. And there are a couple of brokers out there, Advanced Emerging Capital, Samsung Asset Management, and Jefferies. They say that they're still upbeat about Vietnam as inflation stays low, the fact that the government tackles bad debt at a lot of these banks, and that the prospect of a Trans-Pacific Partnership, the TPP trade deal, could actually bolster exporters. International investors have bought a net $188 million of Vietnam stocks in 2014. That's headed for a 9th straight year of purchases. Now, U.S.-based ETFs, these exchange-traded funds that focus on Vietnam, they've received close to $100 million. Let me put that in perspective. That's equivalent to almost 27% of their total market capitalization. That's the biggest increase of all 12 Asian countries that we tracked right here at Bloomberg. So the question is, what's the worst case scenario? Well, Jefferies' chief global equity strategist has this to say. He says, although an escalation of tensions cannot be ruled out, the worst case scenario would be trade-related embargoes or freezing of investment. But the question is, how much upside is there? The head of equities at Manulife Vietnam's asset management, he takes a contrarian view. He has this to say. He says, in the short term, in 2 to 3 months, we don't expect to see a strong rally due to these political tensions. Now, let's just take a look at how this factors into the country's index. Take a look at the Vietnam index right now. You're looking at a year-to-date chart, up about, call it close to 6%, but it's dropped some 13% from this year's peak on March 24th. To give you a sense, Vietnam has a $51 billion stock market that has a price-to-earnings ratio of 13, at its lowest level on a weekly basis. That was since January. So how do you compare 13 to the rest of Southeast Asia? Well, that has a multiple of 15, so you can get a sense of just where this benchmark is. Looking at Vietnam bulls for your global outlook, I'm Mia Saini in Hong Kong.